Tesla's share price has risen from $4 in July 2010 to an all-time high of $1,222 in December 2021. In this video, we will discuss whether the current $1 trillion valuation is justified, and we will determine a fair value for the company. By the end of this video, I will show you what it will take for Tesla to achieve a $3 trillion valuation by 2027. By all metrics, Tesla is considered to be an expensive stock by investors, mainly because of the disagreement of which industry Tesla operates in. Some call it a software company, whilst others believe it is strictly an automotive play. For the sake of this thesis, we're going to value Tesla as an automotive software company. We'll talk more about that in a second. Let's take a look at some of the key statistics for Tesla. Shares outstanding is about 1 billion, market cap of $1 trillion, EPS of $3. At Tesla's peak in January 2021, it was trading at 1,379 PE ratio, but current PE ratio is 295. This is still quite high when compared to competitors like Ford and Google, which are trading at around 28 PE ratio. A high PE ratio does not necessarily indicate that a company is overvalued, as long as it can grow exponentially. For example, Amazon was 2,904 PE ratio in 2012, but was trading at 65 PE ratio in 2021. Between 2012 and 2021, Amazon's stock price has risen by 1,300%. Tesla has a 0.55 debt to asset ratio. The total debt to asset ratio shows the degree to which a company has used debt to finance its assets. Tesla's numbers show that in a worst case scenario, the company can pay off all its liabilities and still have assets left over. Free cash flow is about $2.6 billion. Free cash flow is the money that a company will use to pay off debts, grow the business, buy back shares, and pay dividends to shareholders. Around 85% of Tesla's revenue comes from manufacturing and selling cars. Tesla has gained a leading position in the electric vehicle sector because of its software. I think it's important to value Tesla like an automotive software company. This plays a major role in my valuation, so let's take a quick look at some of the key assumptions I am making for the future. Looking at how the company has performed over the years, Tesla seems to be growing into its valuation. Therefore, I am using a forward PS ratio of 10 and a forward PE ratio of 20. Tesla's revenue has grown at an average of 85% over the last 10 years. Analysts are expecting Tesla to grow at the rate of 73% annually for the next 5 years. To be conservative, I am using an annual growth rate of 65%. The larger a company grows, the harder it becomes to sustain. So I have used a 1% growth decline rate. We're only going to focus on the bullish case for this video because that's what needs to happen for Tesla to reach a $3 trillion valuation. Therefore, I am ignoring any margin of safety for my analysis. Based on my analysis, Tesla could achieve $348 billion in revenue with an EBITDA of $27 billion by 2027. Tesla's high growth required intense capital, hence the reason why the company has raised finance by almost doubling shares outstanding, and this happened over a period of 10 years between 2011 and 2021. Tesla now has a stronger balance sheet, but development of battery technology and new factories will require more capital. Therefore, I am assuming that Tesla will increase shares outstanding by at least 10% over the next 5 years. With a forward PS ratio of 10, that gives me a future market cap of over $3 trillion by 2027. If my assumptions are correct, I expect that the share price for Tesla in 2027 will be around 1,495. To achieve a 10% compound annual growth rate, I have calculated the fair value of Tesla to be around $883, which is what I should pay for the stock today. In 2021, Tesla was the fastest growing brand value with 184% year-on-year growth. This growth rate catapulted Tesla into the top 20 of the most valuable brands around the world. With a brand value of $36 billion, this puts them behind Louis Vuitton and ahead of Facebook. So, what would it take for Tesla to reach $3 trillion market cap? Since inception, Tesla has been awarded a premium valuation when compared with legacy manufacturers such as Toyota and Volkswagen. The reason for this is simply because Tesla is a pioneer in the electric vehicle space. Its phenomenal software upgrades is also another reason why it trades at a premium. Whether you believe Tesla stock deserves a premium valuation or not, the valuation currently suggests that most investors believe Tesla is more than a car company. If Tesla were to lose its edge in software, that that premium valuation could suffer tremendous compression, leading to a valuation like the legacy automobile manufacturers. Tesla must continue its high growth rate at an average of at least 65% per annum over the next 5 years. Demand currently exceeds supply as many customers continue to wait for months before they receive their orders. So I have no doubt that the high growth rate will continue for the foreseeable future. Supply needs to catch up to demand before we see any slowdown in the growth rate of Tesla. As long as the software remains best in class and it continues to receive the love of Wall Street by trading at high multiples, we could see Tesla at a 3 trillion market cap by 2027. Please tap that like button if you got some value from this content. It encourages me to continue to produce more videos for you. If you're new here, consider subscribing so that you don't miss my next analysis on Visa. Until next time, my friends, stay curious and be happy.